This
session we were
conference will
discussed
now
with.
be recorded.
Can anyone recall with the yesterday session what we have been discussed with? So yesterday we have been seen with how we can be able to do the debt schedules. So we have seen that how to calculate it for the annual EAI, UQI, that is a quarterly installment, and also with monthly installment EMI calculation. So then later we started with the financial statements. In that first thing, we have been discussed about the income statement, and we have seen the what are the contents of the income statement. So we started to do with the calculations by taking some examples. So we shall continue with income statement calculation. So can anyone confirm that? Is that the screen you are able to see? The screen, the shared screen, is it visible to you people on your screens?
Yes, sir, it's visible.
Yeah, okay. Thank you for the confirmation. So yesterday we have been seeing that how to calculate the revenue. So I asked you to see with the formula and calculate it directly. And here we had been implemented the yearly increase. So in case of any increment in the prices, the values, so how you can be able to calculate this. I think I've been shared the document also in your WhatsApp group. So please try to make use of it. The next, so COGS calculation, that is cost of goods sold calculations. So here we have an formula. So yesterday when we were discussing the formula, what we implemented when there is an inventory involved, so that was number of units sold into purchase cost. So when it comes to revenue, it is number of units sold into sales price. But when it comes to COGS, number of units sold into purchase cost. Otherwise, in case if the transactions does not involve with the inventory value, so if there is no quantity is being specified for the transaction, so in that case, so you can be able to check it out is that the values are given directly. So if the values are given, then you are supposed to implement this formula, that is beginning inventory, that is opening balance, plus purchases, whatever the purchase cost is there for that period, so that value, purchase value, minus the closing stock, whatever is left over. So this is going to give you with cost of goods sold. So based on this, we have taken one example. So what could be the value of this transaction? So the beginning inventory is 1 lakh, plus the purchases was 4,50,000, and minus with 35,000 the closing stock. So this gives you the value of a cost of goods sold. Okay, so this is how, in case if the values are there directly instead of the quantity wise calculation is there. Okay, fine. So let us take with the case number 2. So here there is a unit quantity is been given. So please see this and let me know the calculation of the revenue as well as calculation of COGS value. Can anyone try? So even if it is wrong also, it's okay. Please let me know that. How do we calculate this? Can anyone give me the answer for this? Please try. Even if it is wrong also, it's okay. Is there anyone online? And make sure that screen is visible to you people. Try to give the answer for this. So, what is the value of a revenue and what is the value of a COGS? Okay, so you can just see this. So, what is the formula of revenue? So, it is units sold multiplied with sales price. At least can you see this and can you try to give me the answer? So what is the unit sold in this as per the information which is available over here? Please give me the answer. What is the number of units has been sold as per the information available on the screen? Okay. So hope you people have got confused. I'm not sure. So here it is saying that the shopkeeper has been purchased 100 football for 30 rupees each. So the total purchase was 100 into 30. But they have made a sales of only 10 footballs. So that is equals to 10 quantity into each it was being sold at 50. So the value of the revenue is 500. But to earn this 500 rupees, so how much did they spend it? So that is the COGS will be calculated as units sold multiplied with purchase cost. Okay, so this is going to be equals to the total sales what it has happened is 10 into the purchase cost of each ball was 30 rupees or $30. So the revenue was 500, COGS value is 300. Okay, so this is how we are going to calculate it with the COGS value. The next, let us see the calculation over here. A mechanic shop reports 15,000 as a revenue and they spent of rupees 10,000. So what is the gross profit? So here it is simple that 15,000 is the revenue minus the 10,000 what they have spent for that 15,000. So the gross profit what you have been received it is 5,000. So now when it comes to the calculation with the values, so directly you can calculate in this way. When it comes to the inventory calculation, so you are supposed to be very careful. So the revenue will be the unit sold, that is 100 into 180, but what it was being purchased. So 100 you are sold into it was being purchased at 100 rupees each. So the revenue minus the COGS value. So that is the gross profit is 8,000. So now in this case we have multiple purchases, multiple sales. So let us see that what was the revenue one. That is for the related to the sales number one. So here it was 50 books which was being sold, and each book it was being sold at 200 rupees each. So this was revenue type 1. Then second one is 80 numbers you have been sold and it was sold at 200 rupees. That is with the second sales you have been earned with 16,000. Now to earn that first revenue, so how much you have spent is equals 50 was the sales unit into the rate of book was 100, and COGS2 that is related to the second sales, it was 80 books were sold but you purchased at 800, sorry, 100 rupees. So you have spent 8,000 rupees. So finally you have to see that, so this plus this the revenue minus COGS1 minus COGS2. So finally the gross profit what you have been earned, so that is 13,000. So that is nothing but the total of this is minus, so 26,000 minus 13,000. So this is the answer what you are going to get with. Okay. So there may be chances with in case of multiple purchases, multiple sales transactions will involve and you are supposed to calculate with this. So you have to be very clear with the numbers. Okay. If you are clear with the formulas calculated for the sales revenue, COGS calculations are the other formulas. So it will be easy for you to do the calculations even if it is a multiple purchases or sales transactions involved. So the next thing is gross profit too. So here we have it. The number of pens sold was 800 numbers at rupees 200. So the revenue is 800 into 200. So with statement questions. And it add 500 pence before itself, and they purchased additionally 300 more pens at a price of 50. So that means they had 500 opening stock which was worth of each was 50, plus 300 again they purchased into 50. So that is the 40,000 worth of goods what you had spent on the COGS value. So finally, what is the gross profit? Okay. So the gross profit it will be the revenue minus COGS value 1,20,000. So hope you people have been understood with this. So if anyone responds, I can understand that. So you are able to understand with what we are doing it. In case if you are not able to see the screen, anything is there, please put it in the chat box so that I can be able to understand that everything is fine. Okay. So now, so let me continue with the same transactions values and try to prepare with the income statement out of this. So with the previous transactions values, whatever we have done, so we have been linked. So here we got to know the gross profit is 1,20,000. So now, what are the operational expenses we have been having over here? Okay. So now the rent amount which is paid over here is 2,000 rupees. The salary which has been paid is 5,000 rupees. And furniture we have been spent around 3,000 rupees. So the total operational expenses what we have been spent. So this will be sum of all this expenses. So which comes up to 10,000 rupees. So now on this, if I calculate EBITDA, so this will be calculated on the gross profit minus the total operational expenses. Accept the screen. So now the EBITDA value is going to be 1,10,000. Okay. So now after EBITDA, so what could be the next line item is, so in this we are going to remove the depreciation and amortization values if anything applicable. So depreciation. So the depreciation means what? So can anyone let me know that what do you mean by depreciation? Can anyone try and let me know what do you mean by depreciation?
Decreasing the value of assets.
Decreasing the value of an asset based on its usage. Okay. So when we are going to calculate the depreciation, we have a various methods. In that, we are going to use it commonly with SLM, that is straight line method. So what is the straight line method means? So you are going to depreciate the value of an asset with the same equal value. So for example, the value of an asset is 2 lakh. Okay. But when you are going to depreciate, so the formula what you are going to use it over here is value of an asset divided by number of years. Number of years of life for a lifespan of an asset. Okay. So what is the value of an asset over here is, so the depreciation value will be 2 lakh divided by 5 years. So every year it is going to get decreased with 40,000 rupees. Okay. So the year 0 it will be 0. So year 1 it is 40,000. Okay. So every year it is going to be on 40,000 rupees only. So when you are going to write the value of an depreciation in the profit and loss account, you are going to take the value of an depreciation equally for all the years. Okay. So in the EBIT, so the depreciation value what we have been taken. So here it has been given that ABC company purchased a car worth of 2 lakh and expected to function for 10 years. That means the value of an asset is 2 lakh divided by the number of lifespan years of asset is 10 years. So that is 20,000. So EBIT value will be EBITDA value minus depreciation value. So it remains as 90,000. So till now, whatever we have done, it has been interconnected to each of this. Okay. The next, after EBIT, we are going to calculate the interest. So why it is interest? So because this 2 lakh rupee worth of asset what we purchased, it was on the loan, where the rate of interest was, being charged at 8%. So we have to pay the interest amount. So 2 lakh into 8%. So which comes up to 16,000. So this value minus interest amount, EBIT minus interest amount, will give you the EBT value, earning before tax. So after calculating the EBT, then we are going to see with there is a 30% of tax to be paid on the amount what you have it before tax. So 74,000 into 30%, that is 22,200 you are supposed to pay, and remaining the net income what you have it is 51,800. So this is how it is going to be linked with each and every transaction. So you will be seeing the transactions in this way. So you have to do the calculation, find it out this is related to what, and you have to arrange it everything as per the income statement format. Okay. So we found it what is the net income finally. So now if I'm going to give it everything under one, so please tell me that what could be the answer for this. So please understand whatever we have done till now, so that it is going to be reflected over here. So what you have understood, that format I've already given. I'm not making you people to prepare it. The simple thing is you are supposed to give me the values what it is applicable over here. That's it. So can anyone see that values which are there in the table and try to put it over here so that we can find out what is the net income we can be able to find out of it.
Gross sales is 32 lakhs 10,000.
32 lakhs 10,000. Very good. Then COGS value. So apply the formula and give me the value.
It might be 24 lakhs 33,000, sir.
24 lakhs. Can you give me how did you calculate, ma? You can give me the values.
Um,
Yeah,
Beginning inventory is 2 lakh 56,000.
2 lakh 56,000. Very good.
Plus purchases is 24 lakhs 25,000.
So we have to plus or minus.
Plus
So plus 24 lakhs 25,000. Then
minus ending inventory is 2 lakh 48,000.
2 lakh 48,000. So is it correct? 2 lakh 43,000 3,000. Sorry, 24 lakhs
24
33,000.
lakh. Yes, sir.
Okay. So the gross profit to be calculated is,
Sales minus COGS.
so revenue minus COGS. Okay. So it gives you 7 lakh 77,000. Next. So operational expenses. We have certain types of operational expenses like advertisement expenses, lease, management salaries, research and development expenses, repairs, returns. So what are those values?
Advertisement is 68,000.
Can you repeat, ma?
68,000, sir.
68,000. Okay. Then
Lease payments is 52,000.
Lease amount is 52,000.
Management salaries is 2,40,000.
2,40,000.
35,000.
35,000 R&D expenses.
22,000.
22,000.
And returns is 48,000.
So there is a returns and allowances 48,000. Total OPEX value is, we have to calculate the sum of all the expenses. So 4,65,000 we have the expenses. So the EBITDA value will be
4 lakh, sorry, 7, that gross profit minus total operational expenses.
very good. So the gross profit minus total operational expenses, which gives you 3,12,000. Then is that, do we have it anything as a depreciation?
Yes, sir, 78,000.
78,000. So EBIT will be,
EBITDA minus depreciation.
yes. So the interest amount here
64,000.
64,000. So EBT will be,
EBIT minus interest.
EBIT minus interest amount. Then the tax, do we have it?
T1,000.
51,000. And the EAT, or the profit after tax or net income, will be EBT
EBT minus
minus
12.
tax amount. So finally we are going to have a net profit of 1,19,000. Okay. So I want you
Yes,
people to do all these things. So Vindhya, did I share it yesterday, this document in the group? So can you just check it out in the group? Do you have
yes,
this
sir.
Excel sheet as income statement?
Yes, sir.
Good. So I want everyone to do it practically on your side. I don't know whether you do use it with a uh, laptop or desktop or with the mobile phones also. I'm okay, but I want you people, everyone, to share this screenshot of this particular, especially this particular income statement calculation with the values. Okay, so please try to understand and try to do this and put this screenshot into the group so that I can understand that you people are practicing with. Okay, so try to put it your name on that table, above the table name, so that I can understand that this person has been tried with this. Okay, it's a request for you people. Kindly share it with the screenshot of that income statement preparation. Okay, so now we have the same income statement calculation in a different way, that is with the units wise. So if your business is something related to the manufacturing or the retail trading business, so you can be able to see the values in this way. So try to calculate it and let me know the answer. So till now we had a ready-made answers. So now you people please try. So now it is, the ball is in your people's court. You people are going to teach me now how to prepare this income statement. So till now, whatever we have learned, so that we are going to put it over here. So please guide me.
Sales
Take
will
a fire.
be
Yeah, yeah, go ahead,
sales.
man. Go ahead.
Yeah, sales will be sales volume into initial sales price per unit.
Okay. So that is the value. If you try to give me that, that could be good.
1 lakh into 125.
1 lakh into 125 rupees. So that is 1 crore 25 lakhs is the sales value for the year one. Then, do you want to
COGS will
calculate
be
everything for the
75
year one,
into.
and then do you want to do it for the year two?
We'll do for year one first.
Okay, fine. Go ahead. So cost of goods sold, how do you calculate it?
Yeah, COGS will be 75 into
75 into
1 lakh.
1 lakh. Yes, 75 lakhs. So gross profit,
Sales minus COGS.
so sales minus COGS. So selling and administration expenses. So if you see, is there any comment has been added? So
Yeah,
you can apply that.
25%.
So 25% of
Gross profit
revenue for
revenue.
that year.
Okay, it's the sales.
So that it should be equals to which value?
Sales value.
So it's sales value into 25%. So that is 31 lakh 25,000. Good. Then
Gross profit minus this entire cost.
okay. So gross profit value minus selling and administration cost. Good. The next depreciation by default it is given as 2000. So the EBIT value will be
16 lakh 75,000. I mean 18
18 lakhs,
lakh
sorry,
73,000.
minus 2000. 18 lakh 73,000. So it is just an imaginary number they have given. So let's see that do we anything. So equipment life is 4 years. The depreciation method to be followed is straight line method with a zero salvage value. So by default the value has been given over here. So we'll consider this value itself. Then the interest amount also it's been given by itself, that is 1500. So the EBT value will be minus 1500. Now on this what we are supposed to do it is calculate the
Yeah.
30%. And finally the net income is EBT minus the tax amount. So that is 13 lakhs 10,000. Okay, so we found out for the year one. So can you try for the year two, ma?
Yes, sir.
Yes.
So sales will be for the year 2, it will be like year 1 sales plus 15%.
So we can increase with sales with 15% from the year 2 onwards. So how do I increase with? So in the last session we had been discussed on how to increase the value from year to year. So how to increase
It will
15%?
be year one sale into 15%
So year
plus
1 sales into 15%
plus year one.
plus year 1 value. Good.
Yes.
Okay. The same thing we can also do it like this, equals to year 1 value into, open the bracket, 1 plus again year 1 value. So, oh sorry, it was supposed to be, it's not year 1 value, it is year the percentage of increase 15%. It is going to be the same thing you are going to get it. Okay, either in any one ways, what you have understood, even that way also it is good. So this is also another way of calculating the same values. So whenever there is an increase, so you can be able to give it in this way calculation also. Okay, so should I do it for the year 3 and year 4, or should we do it everything for the year 2 and then we have to do it for the year 3?
Anything is okay, sir.
Okay, so you can be able to do it for year 2 once, because there are changes from the year 1 to year 2. So we have to take it into, open the bracket, 1 plus, what is the rate of increase is 20%. Accepted. So it has increased. So the next, it is minus COGS value. So it gives you the gross profit. Then here you are going to calculate into 25% of the revenue value is selling and distribution. Then EBITDA value will be gross profit minus selling and administration cost, and again the depreciation value should be subtracted with EBITDA value, and the interest amount should be subtracted, and it should be calculated with 30% of the tax of your earnings, and finally the EBT value minus the tax amount. So like this we can be able to do it for the other year 3 and year 4. So when we know that whatever it is calculations we have done in the year 2 is applicable for year 3 and year 4, so you can directly drag it. So whenever you are going to have the values with this hashtags, so that means this particular area is not enough for the content what you have it inside that cell. Okay, do not think that is an error. It is because of congested space. The area what the content it is there, it is not fulfilled in that the area of that cell size. So you have to increase it. So how do you increase it is, so you should make sure that the column in between this there is a midline, the bifurcation line. So double click on this, either you can hold it and drag it, or if you double click on it, so it is going to get auto adjusted. Okay, so like this it is going to be. So this is how it is going to be calculated with income statement. Okay, so hope everyone have been understood how did we prepare with the income statement. So this is how you are supposed to calculate it, understand with the content what you have it, so what the problems have been given. So based on this you are supposed to do the calculations in the table. Okay, so understand first and then you try to calculate it. Okay, so let us have a 5 minutes of break and we'll be back and we will start with the new concept. So until then you just check it out, is there any doubt? Thank you all for being online. So hope you people have been understood with the calculation with income statement. So kindly practice it with whatever the document I've been shared yesterday related to the income statement. So the next concept what we are going to see it with is the balance sheet. So what do you mean by balance sheet? So what are the contents of balance sheet?
Sir, assets, liabilities, reserves, share capitals.
Yes. So it is one of the financial statement. It is going to tell about the position of the company. So what the company it is in. So whether it is floating or it is drowning or uh, it is in a stable position. So it is going to contain with an assets, liabilities, and the capital information. So when I want to know about this, so we are going to prepare the statements on a periodical wise. So let us see that what are the informations it is going to involve in the balance sheet. So is that my screen is visible to you people?
No, sir.
Okay, give me a minute. I'll just share it. So I'll share the document of the balance sheet to you people so you can practice it. Yeah. So can you check it out in your WhatsApp group? I've been shared with the document. So please confirm me, anyone.
I haven't received certificate.
I'll just reshare it. Can you recheck it out right now, ma?
Yeah, we got it, sir.
So now it is okay.
Yeah, thank you.
And check it out. Is it accessible? Is it getting open?
Yes, sir, I'm able to open.
So it is accessible, huh?
Yes, sir.
Okay, fine. So now we will see that. Hope the screen also is visible for you.
Yeah, it is visible, sir.
Good. So now we are going to prepare the balance sheet. So we have a two sides. That is, one is liabilities with capital, that is owner's equity value, and the other side is assets. So we have to balance it. The formula of the balance sheet is the total assets should be equal to the total liabilities and owner's equity or the capital amount. So now we have the ready-made values over there. So accounts payable value, we have it as 50,000. Then loans payable amount is 4 lakhs. Is it 4 lakhs? No, it is 1 lakh 25,000. So otherwise I can try to connect it from this cell itself. Okay, so that it will be easy for me to get the values. So the owner equity, so equals to 1 lakh 20,000. Retained earnings is 6 lakh. Then the cash value is 35,000. The land value is 1 lakh 25,000. The building, the value is 4 lakh. Then other assets value is 10,000. Inventory value is 35,000. Equipment value is 2 lakh 50,000. And the accounts receivable value is 40,000. So this makes the balance sheet equal on both the side. Okay. So this is the format. What are the components of a balance sheet? So this is the simple components what we are being prepared with. Okay. So the same things it is appearing over here. Okay. So now what we are supposed to do it is we are supposed to prepare the answers for all these things. Okay. So there are 7 questions are available. So I want you people to try this. Try it. So try to see the transactions. As you all know that when we are going to prepare the transactions, we are going to debit something and credit something. So try to find out the transactions, what you are going to debit it, what you are going to credit it. So where the values are going to increase, where it is going to get decreased. So you can directly add it over here. Okay. So I'll just give an example. So how to solve it. So the first thing it says, a company named ABC collects rupees 10,000 from its existing customer against the sales. That means, so now what we are going to prepare the balance sheet, it is of ABC company. So ABC company is collecting 10,000. That means it is receiving 10,000 rupees. The amount which was supposed to be paid by its debtors. So that is the customer against the sales. So where this amount it is going to get affected in the balance sheet, to which all the things. See, as I said, the transaction, whenever you are going to write it, you are going to have a double effect. So one has to be debited, one has to be credited, or on one thing it has to increase, on the other thing it has to decrease. Okay, or it should be increased at the both the side, or it has to be decreased on the both the side of the balance sheet. So you try to find it what could be the answer for this. Say when it says
Accounts
that it is
receivable
collecting the,
will get decreased.
yeah,
Okay.
can you be a bit louder, ma? I'm not able to hear you.
Accounts receivable will get deducted by 10,000.
Okay, it is going to get deducted. That means reduce. Huh?
Yes, sir.
Yes. So now we will go to the accounts receivable and press F2. So F2 is to get the values and edit that cell values. So minus 10,000. Good. So accounts receivable, it is going to get reduced. What we were supposed to receive in that 10,000, we have received it. So it got reduced. So where is the other effect it is going to have? See, whenever the business receives the money or pays the money, it will be in the two forms. Either it will be in the form of a cash or it will be in the form of a bank. Okay. So now in this transaction, so whether the amount what we received, is it in the form of a cash or is it in the form of a bank?
Cash.
Cash.
Cash. Because if it wasn't bank, then there will be some of the reference information related to the bank. Okay. So here the cash. So is that cash is going to increase or decrease?
Increase.
Increase. So I'll press F2 and edit with the value plus 10,000. So you can observe here the total liabilities value is 8,95,000. Since we reduced it became 8,85,000. Again we are increasing on the cash, that is an asset. So it is going to get balanced. Okay. So like this you are supposed to try for the other transactions. Okay. So do this and let me know the answer in the next session. Is that clear to everyone?
Yes, sir.
Okay, fine then. So we'll meet up in the next session. So I've given two assignments. One, it was an income statement. So prepare it, the profit and loss account or income statement, and share the screenshot in the group. And also try with this balance sheet the calculation of all these transactions. Okay. So thank you all. Have a wonderful day.